there is a big relief for NRIs and their parents. Well, if you are a non-resident Indian living in the US or a parent in India sending money abroad for your child's university education, living expenses or family support, there is a major financial update you need to know. Every year, thousands of Indian families transfer lakhs of rupees overseas under the Reserve Bank of India's Liberalised Remittance Scheme, better known as LRS. But for years, one tax rule quietly reduced their cash flow and locked up a significant amount of money with the government. Now that rule has changed, and for many families, it could mean immediate savings. Under the Finance Act of 2026, the Income Tax Department has officially rationalized the tax collected at source (TCS) provision applicable to foreign remittances. The biggest change is this: the TCS rate on remittances made for overseas education and medical treatment has been reduced from 5% to just 2% for amounts exceeding the annual threshold of 10 lakh rupees. It may sound like a small change to you though, but for families paying expensive university fees abroad, it could make a huge difference to their finances. To understand why this matters, we first need to understand how the old system worked. Earlier, if a family sent about large amount of money abroad to pay university tuition or living expenses, banks collected 5% TCS on the amount above the prescribed limit. Although this amount could later be adjusted while filing the income tax return or claimed as a refund, the money remained blocked for months. In many cases, families had to wait nearly 1 year before gaining the access to that money. Now, during that period, their liquidity suffered and many parents had to arrange additional funds just to meet the education expenses. But now, the new framework has changed that completely. The first important rule is that 10 lakh rupee annual threshold remains unchanged. Any remittance up to this amount continues to attract 0% TCS. No additional tax is collected by the bank for transfers within this limit. The second and much bigger change applies once this threshold is crossed. Instead of collecting 5% TCS, banks will now collect only 2% of the amount exceeding 10 lakh rupees, provided the remittance is meant for overseas education or medical treatment. Well, let's understand this with a very simple example here. Suppose an Indian family transferred 25 lakh rupees to pay tuition fee for a child who's studying in a university in the US. Now, the first 10 lakh rupees remains completely free from TCS. On the other remaining 15 lakh rupees, the old system would have collected about 75,000 rupees as TCS. But under the new rule, the same transfer will attract only 30,000 rupees in TCS. That means the families immediately saves about 45,000 rupees in blocked cash. Instead of waiting months for a refund, they now retain much more liquidity, which can be used, by the way, for anything: accommodation, books, insurance, travel, or any other educational expenses. And yes, there is another benefit here. If overseas education is being financed through a recognized education loan, and that too from an approved financial institution, TCS rate, it continues to remain 0% regardless of the remittance amount here. This provides even greater relief for families funding the higher education through formal bank channels. However, there is an important warning that many NRIs and resident Indians should not ignore. The reduced 2% rate applies only to education and medical remittances. If you are sending money abroad under the Liberalised Remittance Scheme for foreign stock market investment, overseas real estate purchases, or general gift to non-resident relatives, the tax treatment, it is completely different. Well, for these categories, the TCS rate, it remains to continue 20% on amounts exceeding 10 lakh rupees. That means a 50 lakh rupee transfer made for overseas investment can still result an immediate 8 lakh rupees TCS deduction at the time of remittance. So using the wrong remittance category, it can prove extremely expensive.